Next, I would like to invite Eddie. Eddie is the, I got my salutation all, but I have to prepare his managing director, right, for Elegant Hallmark. So give a round of applause, and he will teach you about writing proposals and all. And thank you, Eddie, for your time here. The mic is there. Use that mic first while I sanitize this. Okay, I'll sanitize this later. And then the present. This one is the clicker. You've got the tablet here. Thank you. All right, come on. And you have this. Yeah.
Okay. Yeah. Thanks, Carol. So thank you, everyone. Yeah. Before I start, I want to formally thank the organizers, MDEC, and also our co-organizer, MCMTC, and SME Corp. Obviously, SJPP to be featured as colleagues here. So as mentioned by Callum's, no money, no talk. Yeah. So this is not only applied to business, also applied to individuals. No money, you cannot get a girlfriend. That's the reality. so my session is okay. Okay, so 4 areas I'm going to cover within 20 minutes. It's very tight. That's why I set a timer myself also. I set it for 25 minutes just in case I overrun it. So 4 areas. First is about understanding bank financing. What is all about bank financing? Second, what are the financing challenges faced by SMEs and also mid-tier companies or businesses in general? So how to leverage on the government guarantees. I mean, SJBP is here to support all of you, and charging forward, what are the things you need to do to move forward. Okay, 1.0, hopefully it's 1. I will just mention it 1.0, if not 1.0, let me know so I can click it. 1.0 is about understanding bank financing. Yeah. So okay, I will move on fast. So definition of SME and MTC. Yeah. Just now I think Callum briefly mentioned it. So definitions are done by two different categories. Yeah. For SMEs, is measured by turnover and also companies' employees, full-time employees. Yeah. For SMEs, basically you're talking about turnover not more than 50 million for manufacturing, and SMEs 20 million, or employees for SME services up to 75 and manufacturing up to 200. So either one, you fulfill either of the criteria, you will become a SMEs. For mid-tier companies, anything beyond that, but it's capped at annual turnover up to 500 million ringgit. Yeah. So just now Callum already mentioned it, and there's no restriction in terms of number of full-time employees for these mid-tier companies. Anything beyond 500 million turnover is considered large corporations, which means you will not be able to enjoy whatever incentive given by the government, because most of the incentive or assistance given by the government are to help small and medium mid-tier companies. Okay, what are the major business constraints faced by businesses? Yeah? So based on this survey done by Bank Negara in 2018, I mean that's before COVID. Yeah. So long list of problems there. So the first one, increased competition, fluctuating demands, all this thing. If you look at financing, actually is the second last, is number 8. Yeah. So only 19% of the respondents says they have problem with financing to grow the business. Of course, this is qualified because it's only what you call correct for the respondents. Yeah. So basically 5 on the right columns, I listed down 5 areas of concern faced by businesses. Basically revenue, they don't have enough business. Cost that is too high, so they can't make enough profit. Yeah. And people try to find good talents or the right people to help them to expand the business. So the number 4 is about financials. This is where financing comes into picture, because you need money to grow your business. No money, no talk, right? So you need a lot of money. And number 5 is about governance. Yeah. So there are some a lot of regulations you need to fulfill. You have to move forward, especially when you do exports. Not only you need to fulfill Malaysian companies, you also need to do. Okay, so regulations is important, yeah, especially when you do exports, yeah, because you also need to comply with governance in the other country. So source of financing, yeah, if you look at it, yeah, I summarize on the right column. Number 1 is own cash. Why? More than half of the businesses depends on own money to run the business, especially when you are new, yeah, because it's very difficult for you to get financing. the only place you can get is to talk to your mother-in-law or your wife to get some money. Yeah? So second is financial institution. So about 27%, I mean 1/4 of the businesses manage to get some sort of financing from external parties. Yeah? And the third one is again internally generated funds. That means you plow back your profits to run your business. So in terms of age, yeah. So if you look at the green column, green column is green colored. Is external financing debt. These are bank financing. Yeah. So from year 0 or year 1 itself, only about 26% of these businesses depends on external financing lah. But as the business grow towards 5 to 6 years, the number increased to 37%. What does it mean? It means as your business grow a lot older, so it's easier for you to get financing from external parties, basically banks lah. Okay, this is 2.0, yeah, underlying financing challenges. So challenges is only not faced by you, but banks are also facing challenges when they want to consider your loans application. Let's see what are the issues. Yeah. So rejection rate by key business, again based on Bank Negara reports surveys. So the overall rejection rate is only 9%. That means every 100 applications that went into the bank, only 9 are rejected. And don't forget, these are all official numbers. Yeah? Because some of the banks, they rejected without formalizing the application. What does it mean? It means when you submit the application to the bank will look at it. They look at it, they will reject on the spot, because they say some of the criteria is not strong enough, so they reject. So this rejection may not be captured under this 9%. So in reality, based on my experience in the banking for so many years, the rejection rate can easily come to 30 to 40%. So every 10 applications that came in, 4 will have problems. So they say, you cannot because of whatever reason. Yeah. So 9%, so the highest rejection rate was for manufacturing. Obviously, because manufacturing operation is the most complicated, very complex, yeah, because it involves a lot of steps, a lot of equipment kind of thing, yeah. So the numbers differ from different sectors. So challenges faced by business. Why are your application being rejected? So this again, Bank Negara's highlighted a few big reasons, yeah, major reasons. Insufficient documentation. So businesses, you don't prepare enough documents or write documents for the bank to do the assessment. That's why they say, oh, sorry, I can't proceed with your application. So insufficient documentation. I will go more in detail later on because I have more slides there. Yeah. So documentation covers the various type of documents, statutory, accounts, all these things. So the second one is about limited repayment track records. So if you don't have, that's why it's always good for a company to start some relationship with the banks when you don't have a need. When you are strong, you go and talk to the bank, I need small facilities. Very likely the bank will give it to you. In fact, the bank will ask you, you have enough money, why do you need more money? For standby is okay. You establish the record first. So when you have a real need to expand your business, it will be easier for you. Because number one, your record is there. Number two, you know the banks, the bankers, yeah, the relation, the rapport is already there. So limited repayment track record is obviously another concern by the banks, yeah, by the businesses. And this is the obvious one, is a lack of collateral. As Keller mentioned just now, some banks say, oh, I like your business, I like everything about your business, but what can you offer to the bank? So, I mean, companies, right, everything is already plowed back to the business. So either they buy, even if they buy a factory or warehouse, they're very likely the warehouse or factory already pledged to the bank for term loan. So they don't have any asset to be given to the bank. Right, so this is very real, yeah. So lack of collateral. This is the reason why SSBP come into assistance, yeah. The governments here from the ground, they see the problems. That's why SSBP come into the picture. And in terms of banks also are doing business, so they have their own challenges also, right? Because some SMEs, they say, banks don't want to do business. It's not true. Banks want to do business, but they have limited resources. They want to prioritize, so they want to lend it to the right customers and customers with the manageable risk, right? So they have problems. It's not that they don't have problems, yeah. Especially last 2 years during COVID time, yeah? So the higher share of loans with increased risk. So they need to manage it, they need to strike a balance. Yeah? So bank earning negatively impacted by credit costs. What does it mean? Last 2 years, a lot more loans are being deferred in payment, and some, I mean, you heard about NPL or non-performing loans, all these things. So this one is all reflected, I mean, translated into a credit cost for the bank. So when the credit cost is higher, then the bank will become more cautious, right? They become more reserved, right, to giving out more loans. Yeah. So bank challenges. Bank continue, luckily thanks to SJPP, continue lending supported by guarantee assistance, government assistance. 2019 before COVID, loan disbursed 296 billion, almost 300 billion. And 2020, when despite the COVID-19, so the disbursement is still about 260, which is just 10% lower than the normal, which I think is commendable. Yeah? If you look at 2019, the number is still quite strong. 2021, disbursed number is actually about 312 billion, yeah? Which is higher than 2020. So if, the next two columns, 33% are new to bank customers. New to bank customers are not, doesn't mean it's a very new companies. Don't get it wrong, because this is a term used by banks. They have existing to bank, new to bank. New to bank means the company may be very old, but it's new to the bank. That means the banks are acquiring new customers. So this number increased by 33%. And in terms of young SMEs, what is young SMEs? By definition, young SME means company that operated between 1 and 5 years. Below 5 years is considered young. Anything beyond 5 years is considered mature. Anything more than 10 years within the matured is considered old companies. Right? So young companies that manage to get loan from banks are very likely those 3 to 5 years young. So 1-2 years is very, very difficult to get facilities. Okay, now come to the interesting part, 3.0, leveraging government guarantees. How can SMEs benefit from government guarantee scheme? Because we heard so much about SJPP, we heard so much about guarantee scheme, all these things. But how can SMEs really benefit from this? Okay, the application process, as far as you are concerned as a customer, is same. You don't deal with SJPP directly, you only talk to your bankers. You submit your application to the banks will work on your request. Once the bank feel comfortable, they will give you a letter of offer. The process is such that you look at the offers that are given by the bank, you agree, you accept it, then the bank will submit it to SJPP requesting for the guarantee. Right? So I don't know how many percent success rate. Encik Azlan will tell you maybe 90%, 80% of the request will be approved. Sometimes with some changes or recommendation. So very likely SJPP will approve it, because their main objective is to help SMEs. So what are the types of banking facilities normally required by business people like you? So some SMEs, they come to me, they say they are very confused, don't know what to apply. When they go to the bank, they don't know what to ask for from the bank. I say basically there are just two types of banking facilities you need to look at. One is short term, one is long term. As simple as that. Short term is meant for your working capital. That means you may need overdraft for your operating expenses, to pay your staff salary, to pay for whatever short-term or minor expenses short-term. And if you do import or export or even local trades, you may want to have some trade facilities. Trade facilities is preferred by the bank because they are controlled in terms of usage. Why banks are quite reluctant to give you overdraft? Because there is no control in the usage. Because overdraft, even to you can actually use it to buy a car for your girlfriend. So this is what the banks are not comfortable with. So the bank prefer to give you trade facilities, letter of credit, bank acceptance, whatever. So these are all short term. They are short term means you use it for your business operation. The other aspect is for business expansion, which is longer term in nature. So these are the things like term loan for you to buy your factory, when you buy a warehouse, because the repayment will take 10 years, 15 years. That's why it's long term. Even for equipment, machinery, right? So you want to do your smart automation, these are all considered mid-term or longer term. So basically there are just two types. You don't get yourself confused. If you want to do your business, short term. You want to invest into assets, fixed asset, that's long term, right? So when you see the bankers, you just say, I want this, or the bank also, okay, like impress a little bit, like at least you know what you want, right? You don't go and tell bank, well, of course, it's common. I come across SMEs who come to the bank, they say they want OD. We ask, why do you want OD? Because I want to buy a factory. You don't buy factory using overdraft, right? Or sometimes they say, oh, because BA is very cheap, banker acceptance, I want to use it to buy my equipment. So in terms of pricing, of course, it's cheaper, but the purpose is wrong. Yeah, the application is not correct. So these are the things you need to learn a little bit, just so at least you give the right impression to the banker when you talk to them. Because if you ask for the wrong thing, the first impression, the banker say, this fellow don't know anything, cannot. So SJPP scheme, what are the key benefits of SJPP guarantee scheme? I think India Aslan will re-emphasize this later on. Number one, I purposely make it in red, no collateral. That means you don't need to provide the banks any securities, yeah? Because obviously you don't have any to give. So you go to the bank, say I want facilities, working capital, what you need to convince the bank is to justify your requirement. Right? If your company has been losing money for the past 5 years, then it's very difficult. How to justify, right? So you say, oh, I've been growing my business 5-10% every year, but now with a new project, I think I can grow it for 20%, 25%, therefore I need this additional working capital, but I don't have collateral. So I want to apply this loan using the SJPP guarantee. Then the bank will be very convincing. So the second one is the guarantee fee is very cheap. Only 0.75%, yeah, per annum. Per annum, not every month or every day. Yeah. 1 year, one whole year, only charging you 0.75. This is very cheap. Right? Guarantee coverage, they cover up to 80%. That means every million that you take from the bank, SJPP say, worst case scenario, your business collapse, SJPP will pay 800,000 to the bank, and the bank absorb 200,000 loss. That's simple, right? So now at this juncture, there are 10 different schemes. They have women enterprise, I think they have covered digitalization for different purposes. Yeah, there are 10 different schemes. But this one again, you don't have to worry because the banker will make sure you apply to the right schemes. And at this moment, 21 financial institutions and 8 financials are involved in the whole business. Basically, all banks are doing these SJPP facilities. So you don't have to worry whether your banks are doing or not. Of course, to show you know about this, you go and ask your bank like, hey, are you in SJPP or not? I want to apply. They say, of course, yeah. Okay, charging forward, yeah. How to secure bank financing against guarantee, government guarantees, yeah. So easiest way, you just outsource the whole exercise to me, that's easier. You pay me money, I will do everything for you. So of course, I will tell you what the process look like. Okay, when you submit your applications to the bank for financing, yeah, actually there are five types of information the banks requested. You look at it. So number one is statutory documents. What are these? These are basic law, M&A 2449, yeah, just to prove to the bank that your companies are legally established. So the second one is about financial information, your audited accounts, your bank statements, management account, all these things. So it's critical. So the third one, this is a bit challenging for most businesses. You need to provide the bank with a good comprehensive business plan. Business plan is just not about what is your company vision, what is your vision. Otherwise, it's not difficult. You go to Google, you can find a lot. You can just cut and copy and change a bit here and there. Change the comma, all these things, yeah. But more important for the bank is they want to understand how you run your business. What is your business model? How do you make money? How do you deal with your customers? How do you manage your stakeholders? All these things, yeah. And obviously, what is your cash flow projection for the next 2-3 years? How are you going to make money? Because if you can't make money, you cannot survive, right? So the fourth type of information about financing details. Yeah? So again, go back to the basic. What are the types of facilities you want? Remember, don't go to the bank and say I want BA because I want to buy a new factory. That is wrong, yeah. So you must look smart now. Look smart. You ask for the right facilities for the right purpose. So purpose, pricing, and other terms and conditions. And security arrangement, banks like to have tangible assets. If you have assets, that is fine. You can charge your asset to the bank, so you save paying SJPP 0.75% commission. But if you don't have, then SJPP is the best option. That's why I put the last column is guarantee, government guarantee, and the middle one, director guarantee. Yeah? So I have also come across some customers, yeah, they say, oh, I don't want to give the bank any guarantee because I don't want to have personal liabilities. If you are listed company, the bank obviously will accept it because the company doesn't belong to you, because you are, even though you are a shareholder, but your shareholdings as a listed company probably you hold about 30-40%, right? But for Sendirian Berhad, so the banks must have your personal guarantee as a commitment. Because if you are so concerned about the bank calling on the guarantee, that means you yourself also not sure, right? Not confident. If you are confident, then why worry? Just sign. Anything happen, let the bank sue me, right? So you must have that kind of commitment to show to the bank, yeah. So director guarantee, don't waste your time negotiate with the bank. Even the bank say okay, SJPP will not say okay. SJPP will still want the director's guarantee, yeah. Okay. Then, once the bank received your application, what do? Again, they look at 5 different kind of assessment to consider whether to grant you the facilities or not. So first is customer due diligence, KYC. I think you guys are very common, right? You hear about KYC, but what actually KYC stands for is know your customers. That means the banks will do all sort of searches. They will find out who are you, your background, were you a bankrupt before, were you be sued, or you are suing people, all these things, so they understand you more. So name screening, there's a lot of companies out there to help, banks are engaging different companies to do these kind of things. So legality and suitability to banks policy. Because a lot of banks now what do you call it, adopting this responsible banking. Responsible banking, that means if you are doing some business they are damaging to the environment, they will say no to you. So these are not in line with their policies. Right? For example, you are making gunpowders or this thing, most bank will not deal with you because this is considered military related things. So number 2, business risk. The bank will look at the risk, your business that are related to your activities. And whether or not your business is feasible, right? For example, some businesses you wanted to do today, which your bank feel there's scope, limited scope for expansion, so the bank may also say no to you. Because the banks, don't forget, the bank have limited resources, and the bank have thousands of, hundreds of applications at any one time, yeah? So they can prioritize who to give to. Because they want to minimize the risk and to make sure the money they lend out can be collected. So business risk, and the third one is financial risk, right? Financial standing of your business resilience. Yeah? How strong are you? Right? I mean, during the last 2 years, some report says how many 150,000 SMEs actually closed down, but we don't have. I still haven't find the exact number. I've been searching. From this statistic department, I don't see the number. But based on some association, some claims 150,000, some say 50,000. So it's bad. 50,000 is bad, right? So the banks would not want to lend to a company that may collapse in crisis time or in challenging time. Of course, this is easier said than done because in the good time everything looks so rosy. And site inspection, this is again very important, because banks still seeing is believing. They will make effort. The RMs, relationship officers will go and inspect your factory, because site inspection is very useful for the bank, because by looking at your warehouse they can know whether your stocks are moving fast enough. Because if they look at your stock, they see a lot of cutback, they know. So site inspection, level of business activities, overall setup of the business. So it's very critical, especially when you are export to or you're dealing with multinationals. So they will also send the auditors to your company. Callum can share a lot more with you. So I visited his factory many years back, I think more than 10 or 15 years. So his factory, I was talking to him, hey, did you ask your cleaner to purposely clean up your floor because you know bankers are coming? He said, no, this is every day is as clean. So I was impressed. Then he also brought me to, hey, I went to so many factories. He's the only one who brought me to the factory toilets, you know. Normally when you go to the factory, you want to visit the toilet, the boss will bring you to the executive toilet, the office are very clean one. But he's the only one, he say, hey, you're trying to go in, you come and visit my toilet. So again, I was impressed, it's really clean, you know. So what does this tell the bankers? So it reflects of the management, right? Management is very stringent, very strict on all these, even those toilets may not be revenue driving factors for the company. But this is a good reflection of the company. And finally, after the bank look at all these things, they will make a credit decision, either approve, they can approve or reject, or get back to you, ask for further information. Yeah. So bank will price it according to the risk and reward. If your business is lower risk, they can charge you cheaper. Otherwise, they will charge you slightly higher. But for SME, I mean, frankly, there is not much different. Whether the bank charge you 1.75, 2% or 2.25. Because your quantum is rather small, yeah. Whatever pricing that the bank charge you is per annum basis, it's not per month or whatever. So even the bank charge you 0.5% more, so average about 0.4 per month. So it's not really critical. Because important is you must have your money to expand your business. So don't forget to look at the terms and conditions when you receive the letter of offers, because a lot of SME they just sign because I look at the numbers, I like it, they sign. Because some of the condition may not give you issues now, but may give you some issue in the future when you want to get another bank or want to expand your business. So be careful with this. So my last slide, yeah. Straight along. So assessing bank financing can be challenging. This is real because 40% of the applications are being rejected every year. Mitigating the challenges is the key determinants to secure financing. So government guarantee schemes are real. It's not theory, it's real because already there for more than 10 years. I remember it started, I think, 21.5 or so, or maybe earlier, yeah, much earlier. So important when you deal with the bankers, don't frustrate the bankers because they are human, yeah. If they don't like you, they just say, okay, I leave it aside. So improve your financing readiness through complete and thorough financing application. You give them a complete application to make their life easier, so they can quickly look at your case and make a decision on it. So everybody is ready to assist you, MCMTC, myself, SJPP, SME Corp, MDEC. So all of us are here to help you to progress in your business. So with this, I think I end my presentation here. Thank you.
Thank you, Eddie. That was good. And before we go for the break, is it turned on, the mic? Sudah turn on? Then we go, boleh. So thank you. That was good. But first time also trying to learn what you guys do, because usually when I do workshops or seminars like this, we only invite platform providers, very techy. Not so much of chartered bankers or chartered accountants or even Caleb also are here. We don't know. We don't know this information at all. So that was very informative, I would say.